Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over some ratios, look at the ratio updates to see what's going on and how assets are basically performing against each other. So we'll take a quick look at that. We'll go over the 10-year yield. We'll go over some other stuff that I see fit. So let's dive in. I'll give you my financial opinion here. I've got the CRB index to S&P 500 right behind me. Long-term view, we're coming on down, and we've got some good, big old buying pressure here. Big buying pressure, small selling pressure is what I call it. I know it's a ratio. What we want to see are large up movements and small pullbacks. And that's what we're seeing, and we see a trend line break. So everything looks really good. If we zoom in and look at the daily candlesticks here, we have a couple of patterns. We broke this pattern to the upside through the resistance line, did a return move, and then broke this line into a new uptrend. So the ratio is moving favorably for commodities to outperform the S&P 500. It very well could kind of pull back a little bit before heading higher. But overall, we're in an uptrend, and that's really what matters. Switching into the platinum to gold ratio, looks like we got a little bit of a squeezing up here a little bit. So we squeezed on up. We kind of rolled down out of this little pattern here. This is a rising wedge pattern. So the ratio could come back a little bit before moving higher. But overall, on a big picture view, the ratio broke to the upside, did a return move, and it's going to work its way higher, I think, to the upside on the medium to long term. But very, very, very short term, you can see a little bit of a pullback. The platinum to palladium ratio, I'm just going to zoom out here. We're in this little channel here. But we're moving on sideways at the moment in the short term. We are very cheap for platinum. That's why we're all the way down here in no man's land at 0.45, signaling that platinum is cheap to palladium. And we've been in this little pattern going back and forth for a little while in the channel. That's where we're at. It does look like, let me get this one out of there, that we could try to work our way higher, which means platinum's outperforming palladium in the short term. And we'll see. I think that platinum's going to outperform all the other metals in the medium term. And the platinum to silver ratio broke to the upside. You can see this guy's playing right there on this downtrend line. We've broken out to the upside. Yeah, we might have a return move. And then I'm hoping platinum takes off against everything, because I did buy a good amount of platinum, hoping that it would outperform all the other metals. And depending on where it ends up, I'll figure out which one I'd swap into. Just guessing, I would probably swap into silver, because silver usually does very well in the back half of a commodity bull market. And I'm hoping platinum can outperform on the front half, so I could do a swap, get a whole bunch of silver, and then silver rocket higher, and then I can swap into something else later. The gold to silver ratio, it's at 80.32. It's cheap for silver. We're coming up into the corner of this guy, of this pattern. Here, this is the big pattern here. Lots of resistance through here. So more than likely, it's going to tap its head on this resistance and probably turn back down. Usually silver outperforms gold under market conditions that we have in an expansionary phase of real estate. We are at the beginning of this expansion phase of real estate, so it may take some time for, I think, gold and silver to take off and really start to move. But again, I think they're great areas to be in. They will go higher eventually. This one is the palladium to silver ratio. We've just been chopping sideways in this ratio, and we're starting to come back down a little bit. Usually in these market conditions, palladium underperforms silver, and we'll see a large move to the downside. Big long-term perspective here. This is the beginning, and 98 to was 2001, palladium outperformed silver, and then silver outperformed palladium all the way down to 2009. And then again in 2011. So those two double bottom, and then palladium really started to take off and outperform silver under that disinflationary type period all the way till 2020. And then silver starting to put the move on. Dow Jones Industrial Average to gold. Big picture view, yeah, we're right here, kind of coming on up. We're at about 19.4, which is pretty expensive for the Dow Jones Industrial Average. We did a return move. So we broke to the downside. We came and did a return move, and now I'm looking for gold to step in here and start putting the pedal to the metal, and the Dow Jones Industrial Average to have continued weakness. So I'm suspecting that this ratio were to decline, meaning that gold's going to outperform the Dow Jones Industrial Average. We have a rising wedge in this ratio, which is it's going to put downward pressure on it. Gold to oil ratios at 20. We are getting to very low levels. It looks like it's playing with this here. This is a bearish engulfing to go lower, but we have a little hammer pattern like there's some support here that might kind of move on up a little bit and go sideways. So we'll see where that goes, but it's definitely been favorable for oil against gold as this ratio's declined and declined and declined. And eventually I think the ratio is going to end up somewhere below 10, meaning oil is going to outperform gold. This is the copper to gold ratio. We're zooming in on it, and man, it's been chopping back and forth between each other, the copper and gold ratio. And we're right there. It looks like it wants to break to the upside and do a little run. It did a run last bull market from 03 to 2006, and then it kind of cooled off. So I think we're going to see that run up potentially to the upside. Looking at the dollar, and the dollar prices all these commodities. So it's important to know what the dollar's doing. This is the dollar index. The dollar index has a nice little bearish engulfing, which means we could head lower. This is on a monthly candlestick basis, so it can change still. But we had this move higher, and sellers stepped in and sold the dollar off quite dramatically here. Basically pushing, we had a good break to the upside, and it reversed. So we're back in this kind of pattern between this resistance line or support line and resistance line, just chopping sideways. And then the 10-year yield definitely has a break to the upside out of this little pattern I drew. And, this is the dailies. We had a nice big move last trading session to the upside. And I think yields are going to continue to go higher. What this means and how this is going to impact a lot of our investments with the yields going higher is I think you're going to see a rotation out of bonds and stocks eventually. It depends how high these interest rates go. If the interest rates keep going up, it's going to hit a point where people are going to really start to rotate money. I don't know what the interest rate necessarily is at, the threshold level where people are like, whoa, get me out of stocks. It's probably around 2.5%, 3%. That's my guess. So if we get to a 2.5%, 3% area, I think that's where a lot more money is going to rotate out of stocks as well, not just bonds. So I think that's kind of the threshold area. Moving on down, we've got the CRB index priced in dollars. This thing looks absolutely ridiculous. Nice, good falling wedge, which is a bullish signal for a break to the upside. We had a capitulation bottom, false breakdown, and then boom, it launched like a slingshot higher. And we've had nice, very good, strong movement the entire time in the CRB index, priced in dollars. So that looks absolutely bullish. Looking at the daily candlesticks, this looks bullish too. It just keeps going higher. The inflation is quite dramatic, if you're pricing it in commodities. Let me scroll on down here. We'll look at a couple maybe other things. I've got it all down here real quick. 1 second. Scroll, scroll, scroll. Here, we got the price of lumber. Lumber has been very volatile. It's been moving on up. We had a nice little pattern here, broke to the upside, then came on back. Created another pattern, broke to the upside, came on back. We do have a big bullish engulfing here on the daily candlesticks. This is going to go higher. You can see it moving up higher these last 2 days. And this looks like it's ready to continue to go up. So I think what lumber is going to do is it's probably going to be pretty strong. We are going into a housing boom. From my understand, we're starting to hit into the limitations of production of lumber in some areas. And we may struggle to go over 200 or 2 million home starts based off of how much lumber we can produce. That's kind of in some of the articles I was reading. Nickel's done very well. We've got this big old pattern. It's popped to the upside of that pattern. And I think this is going to continue higher for nickel. Nickel's looking really, really strong in terms of dollars. Some of the commodities like cocoa futures, it's been moving sideways with a slight upward slant. We just got to break out of this resistance area. We're right at that resistance area right now on a short, kind of a medium-term basis. On the long term, we got to break the big boy pattern here to the upside. And that's going to lead to a very large move in cocoa futures. So I'm looking at much higher agricultural prices. We've got wheat that already broke out. This thing looks fantastic from a 1973, and it's breaking to the upside and moving on higher. So food prices are going to go higher. I think that's definitely something that's going to trade higher. Here's soybeans. Soybeans, we've got kind of basically the last resistance line that we're toying with before a very large break to the upside for soybeans. So that's right at its end. Corn futures is trying to put in a pattern to break. This thing already broke the monster pattern back in 74. Broke, it came on back, and now we're working on this next one. Copper, priced in dollars, this thing looks like it wants to go higher. It's looking quite strong. We just got to break out of here and get on moving. Looking at the global price index of all commodities, it is still incredibly high. I expect this to go much higher. The PPI, producer price index, we have a little bit of a downtick here, but remember, guys, this could pull back a little bit, and it's no big deal. And then we have another surge higher. But that's what it looks like on a long-term basis. It continues to move up. We are in a impulse move higher at the moment. This is the CPI. That thing just keeps going up. I don't see why it wouldn't. And then housing starts, we're at 1.7 million. This is above the average. The average is like 1.45 million or so, and we're going into an expansion phase of real estate for housing starts. These large housing starts up here were all very inflationary periods. I don't see why this wouldn't be an inflationary period, especially where how much money has gone into stocks and bonds, and that rotation coming back into commodities is going to be very inflationary because it's going to push prices higher. That's what I've got for the commodities and kind of some other information on the market, looking at kind of market conditions. Everything is very favorable for commodities to continue the outperformance against other assets. So that's where I prefer to be. The more research I do, the more drawn I am to the energy sectors and fertilizer sector. The next sector that could be very good is agriculture. I just don't know how to play it. I don't know how to play it. If you could play directly in the futures markets, which I don't do, with the actual soybean, corn, stuff like that, I just don't know how to play it because you could have the food prices go up, but all the input costs are going up. So rather than being directly associated with the food prices, because in my opinion, fertilizer prices are going to drive food prices, I'd rather be playing the fertilizer companies. And then the energy companies are also going to be driving a lot of the costs higher because that's your input costs for a lot of these mining companies and agricultural business companies and whatnot. So I'd rather just play the energy companies directly. So I'd rather own a bunch of energy companies, and I think uranium and oil and natural gas are the spots to be. Along with, I do like fertilizer companies. They look really good, a lot of their charts. Another way that you could play this is to do some royalty companies and look for royalty companies that have maybe potash fertilizers and other ones, and I'm playing those as well. So that's my my playbook, and the market conditions look absolutely fabulous, and the ratios are all very good and changing favorably for commodities. Give me a thumbs up for the content. Subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.